Yogyakarta. The soul of Java. The cultural richness kept maintained, bearing unpretentious souls, creating young intellectuals who are ready for the world. Hugh, born Muhammadiyah Association, a progressive Islamic organization, engages in various fields of life. One of them is education. By the idea of Professor Dr. Kahar Muzakir on the 1st of March 1981, Universitas Muhammadiyah Yogyakarta presents to enrich young intellectuals' competence, actualizing Muslim scholars who are noble, competent, confident, able to develop science and technology, useful for the nation and world developments.
Accounting Department Universitas Muhammadiyah Yogyakarta is a leading accounting department in Indonesia. This department has got A accreditation since 2005, when only a few accounting departments can get this accreditation status. There are many achievements that students have received. Winner in a number of capital market competition, winner in scientific competition, and recently winner of National Enterprise Resource Planning 2018 competition, that 5 students of this department will represent Indonesia to compete in Singapore. Therefore, this department has produced competitive alumni that they can compete in job market while maintaining Islamic values.
Have a good characters, integrity, and global insight. To support the graduate competence, we provide extra services such as and most management training. Meanwhile, we also provide certifications such as Enterprise Resource Planning from Muslim and Associate Certified
Accounting in International Program of Accounting, IPAC QMA. The IPAC students are conditioned to be superior and have characters. The academic environment that shapes them among lectures, assignments, discussion, presentation, using international language. Our guest lecture, professor, visiting companies, students exchange, credit transfer that make them global minded. I can speak Indonesian, but I always speak English as international when teach and discussion with the students to formalize them with the global atmosphere. The enthusiasm of students, the seriousness of program manager, and a conducive environment, for sure IPAC alumni will be a superior in accounting profession with Islamic values.
Yogyakarta. Jiwa dari Pulau Jawa. Kekayaan budaya yang terus terjaga melahirkan jiwa-jiwa bersahaja, menciptakan para intelektual muda yang siap mendunia. Di sini terlahir Persyarikatan Muhammadiyah, organisasi Islam progresif yang bergerak di berbagai bidang kehidupan, salah satunya pendidikan. Atas gagasan Profesor Dr. Kahar Muzakir pada tanggal 1 Maret 1981, Universitas Muhammadiyah Yogyakarta hadir memperkaya kemampuan para intelektual muda, mewujudkan sarjana muslim berakhlak mulia, cakap, percaya diri, mampu mengembangkan ilmu pengetahuan dan teknologi yang berguna bagi umat bangsa dan perkembangan dunia.
Program studi akuntansi Fakultas Ekonomi UNY itu didirikan tahun 1993. Waktu itu didirikan dengan dua latar belakang minimal. Yang pertama adalah kebutuhan pasar, bahwa sektor industri Indonesia waktu itu masih terjadi kekurangan tenaga ahli akuntansi, akuntan. Kemudian yang kedua, secara sumber daya kita cukup memadai.
Di bawah pengelolaan yang profesional menuju world class quality dengan mengusung visi menjadi program studi akuntansi yang berorientasi global dengan bertumpu pada penguatan iman dan takwa kepada Allah Subhanahu wa Ta'ala, penguasaan ilmu pengetahuan dan teknologi akuntansi, serta menjadi pusat keunggulan yang bermanfaat bagi umat manusia. Dengan misi berperan aktif dalam proses pembangunan bangsa, pencerahan umat melalui Tridharma perguruan tinggi, dan menghasilkan Young and Global Accountant berakhlak mulia. Sejak tahun 2000, studi akuntansi Universitas Muhammadiyah Yogyakarta telah terakreditasi A. Penciptaan atmosfer akademis dan pembentukan karakter kompetitif terus ditingkatkan, sehingga kepercayaan masyarakat terhadap program studi akuntansi Universitas Muhammadiyah makin tinggi, terlihat dari banyaknya jumlah peminat yang mendaftar. Pembelajaran di program studi akuntansi Universitas Muhammadiyah Yogyakarta didukung dengan fasilitas penunjang yang baik seperti sarana perpustakaan, tempat mahasiswa dapat mengakses referensi yang relevan dan memadai, seperti e-jurnal dan e-book. Ruang tata usaha tempat para mahasiswa mendapatkan pelayanan administrasi perkuliahan, serta wifi area, lab praktikum, dan Masjid Kiai Haji Ahmad Dahlan. Program Program studi akuntansi juga menaungi langsung himpunan mahasiswa akuntansi yang mampu menjadi wadah bagi mahasiswa untuk mengembangkan soft skill di bidang organisasi serta pengembangan diri. Selain didukung oleh fasilitas yang mumpuni, atmosfer akademis juga dibangun melalui tenaga pengajar yang telah tersertifikasi secara akademis maupun praktis, yang terlibat aktif dalam kegiatan akademis dan profesi berskala nasional maupun internasional sebagai upaya pembaharuan ilmu akuntansi yang dimiliki. Proses pembelajaran juga mengacu pada kurikulum berbasis kompetensi yang merujuk pada KKNI atau Kerangka Kualifikasi Nasional Indonesia melalui pendekatan metode pembelajaran Student Center Learning, Discussion, Presentation, dan Problem Solving.
Pelajari akuntansi manajemen, akuntansi keuangan, itu saya gunakan mengatur biaya, mengatur laporan keuangan, dan yang paling penting adalah kita bisa mengetahui posisi bisnis kita.
Apa yang saya dapatkan ketika kuliah di prodi akuntansi memberikan bekal yang cukup untuk saya menjalankan pekerjaan, juga merintis usaha sampai dengan sukses menuju persaingan global dengan tanpa mengesampingkan faktor dari ridho ilahi. Terima kasih.
Berbagai upaya yang dilakukan program studi akuntansi Universitas Muhammadiyah Yogyakarta melalui pemberian fasilitas penunjang hingga menjalin kerjasama dengan instansi dalam negeri maupun luar negeri merupakan proses penciptaan atmosfer akademis yang kondusif, serta peningkatan prestasi bagi civitas akademis program studi akuntansi Universitas Muhammadiyah Yogyakarta. Diawali dengan kesadaran bahwa kecerdasan dan kesejahteraan umat adalah tanggung jawab bersama, sehingga memberikan yang terbaik dalam membentuk generasi penerus bangsa adalah satu tanggung jawab yang patut ditempuh untuk menjadi yang unggul dan islami dalam dunia akuntansi nasional maupun internasional. Program studi akuntansi Universitas Muhammadiyah Yogyakarta, unggul dan islami.
Yogyakarta. The soul of Java. The cultural richness kept maintained, bearing unpretentious souls, creating young intellectuals who are ready for the world. Hugh, born Muhammadiyah Association, a progressive Islamic organization, engages in various fields of life. One of them is education. By the idea of Professor Dr. Kahar Muzakir on the 1st of March 1981, Universitas Muhammadiyah Yogyakarta presents to enrich young intellectuals' competence, actualizing Muslim scholars who are noble, competent, confident, able to develop science and technology useful for the nation and world developments.
Accounting Department Universitas Muhammadiyah Yogyakarta is a leading accounting department in Indonesia. This department has got A accreditation since 2005, when only a few accounting departments can get this accreditation status. There are many achievements that students have received. Winner in a number of capital market competition, winner in scientific competition, and recently winner of National Enterprise Resource Planning 2018 competition. That 5 students of this department will represent Indonesia to compete in Singapore. Therefore, this department has produced competitive alumni that they can compete in job market while maintaining Islamic values. I believe by joining Accounting UMA, you have made a very good decision to be a successful person in this world and the hereafter, inshallah.
Accounting Department of Universitas Muhammadiyah Yogyakarta was established in 1992. Our mission is to produce Bachelor of Accounting who master in science and technology, have a good characters, integrity, and global insight. To support the graduate competence, we provide extra services such as training and certification, like Islamic banking training, taxation training, internal audit training, external audit training, and most management training. Meanwhile, we also provide certification such as Enterprise Resource Planning from Munsun SIM and Associate Certified Public Accountant from Indonesian Institute of Public Accountant. To face the business changes in the era of Industry 4.0, the curriculum of Accounting Department focuses on ability to utilize information technology and ability to take strategic decisions. We expect that Accounting Department can keep contribution in producing human resources who are excellent, Islamic, and have a global insight.
Universitas Muhammadiyah Yogyakarta has set up a new tagline of Young and Global. In order to speed up this mission, the Department of Accounting proposed to establish International Program of Accounting Universitas Muhammadiyah Yogyakarta. This program is expected to be the driving force for continuous improvement in providing better services and facilities in education system at the Accounting Department. The increasing needs of graduates with good qualification and international recognition drive the Accounting Department to focus on developing main competencies of technology information, international financial reporting standards, public sector, and Islamic accounting. Under the professional management towards the world-class quality with a vision to become a global-oriented accounting department by focusing on strengthening faith and piety to Allah Subhanahu wa Ta'ala, mastering science and technology of accounting, and being the center of excellence which is beneficial for people. With the missions of being actively involved in the nation's development process, enlightenment of people,
Tanggung jawab manusia sebagai khalifah. Manusia diberi status yang
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Okay, maybe we can start. Who will be the MC for today from IPAC? Tiara, you will be?
Yes,
all right, okay. I think Professor Zaini has joined already.
Yes, I'm already in.
Okay, Assalamualaikum. Good morning.
Salam.
Okay, Miss, I start now.
Yes, please.
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Good morning, everyone. Welcome to today's general lecture. In this general lecture, we have Datin Dr. Zaini binti Embong as our speaker today. If everyone is ready to start, I will open the session. Before start, I remind you to open your camera and unmute your audio. The Honorable Datin Dr. Zaini binti Embong as a speaker for today's event. Evi Rahmawati, SEMACC, PhD, AKCA, as a moderator for today's event. Diah Eka Ari Sekari Jatiningsih, SI, MSI, QIA, AKCA. Dr. Harjanti Widyastuti, SI, MSI. Dr. Eti Krisnawati, SI, MSI. And Fitri Wahyudi, SE, MSc, as a head of International Program of Accounting. And the Honorable Accounting Lecturer and the participant who attended today's general lecture. Alhamdulillahirabbil alamin wassalatu wassalamu ala asrofil anbiya wal mursalin wa ala alihi wa sahbihi ajmain amma ba'du. First of all, let us praise to the Almighty God, Allah Subhanahu wa Ta'ala. Because of His blessing, we are able to attend this general lecture with the topic Intermediate Accounting Impairment. As a speaker, Datin Dr. Zaini binti Embong, organized by International Program of Accounting. Secondly, may salawat and salam always be present to our Prophet Muhammad Sallallahu Alaihi Wasallam, who has guided us from the darkness to the lightness, as we hold today. Let me introduce myself. My name is Tiara Larasati, as the Master of Ceremony. Here, I would like to show you about the agendas we have arranged today. The first agenda is opening. The second agenda is general lecture session, and then we continue to Q&A session. And the next agenda is photo session. The last agenda is closing. Okay, let us start the first agenda, that is opening, by reciting Basmalah together. Bismillahirrahmanirrahim. The next agenda is general lecture session with the topic Intermediate Accounting Impairment. This event will be guided by our moderator, Miss Evi. She is an accounting department lecturer of Universitas Muhammadiyah Yogyakarta. She teaches intermediate accounting, which subject related with today's topic. For Miss Evi, time is yours.
Okay, thank you very much, Tiara. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Good morning, everyone. First of all, I would like to say thank you for Dr. Zaini binti Embong from Center for Governance, Resilience and Accountability Studies, Faculty of Economics and Management, University Kebangsaan Malaysia. Assalamualaikum, Dr. Zaini.
Waalaikumsalam.
Thank you for joining with us this morning on our general lecture with our students from accounting department at University Muhammadiyah Yogyakarta. Good morning, everyone. I hope everyone is in good health. Before we start our general lecture, that the topic will be on impairment, related to the topic from financial accounting or intermediate accounting, where reporters need to value related to the asset, whether the asset are the value are declining. So this is related to impairment. So I hope everyone will learn a lot from Dr. Zaini today lecture. But before I give the time to her, I would like to read her curriculum vitae short. First, her academic qualification. She has her doctorate in business administration in 2010 from University Kebangsaan Malaysia, and her master of business administration from University Kebangsaan Malaysia, and bachelor of economics from University of Manchester, United Kingdom. And she is the head of community and industry faculty of economics management from 2015 up to 2017, and coordinator of Chitra from 2014 and 2015. And her specialization is on corporate reporting, specifically on voluntary disclosure, financial reporting, accounting standards, capital market, corporate governance and community engagement. Okay, and I think she has so many publication. If I read all her publication, then it will take the whole time. And I think her specialty or her interest is on financial accounting. So it's really related to today's topic, related to impairment. Okay, everyone. I think now, Dr. Zaini, I would like to welcome you. Please, the time is yours for this topic in impairment. Thank you.
All right. Thank you, Dr. Evi Rahmawati. Maybe we can collaborate on research later on.
Yes, please. Yes, that will be great.
All right. Welcome everyone, and thank you for giving me the opportunity to share a little bit of my knowledge in this area. Should I say everyone's name? Because who is here? Ms. Fitri Wayuni is here, the Director of International Accounting Department. Yes? So I'm sorry if I do not greet everyone because I do not really know. So I think we can go straight into the topic. When I was given the invitation, it stated that a general lecture, but then when I looked through the course outline, I was telling myself, why talk about something that is unrelated to the course? So looking through the course outline, and I see if I were to talk about property, plant and equipment, it will not fit the 2 hours. So taking just a part of it would not be satisfactory to me. So when I looked through, I saw impairment. And I think, oh, okay, this is a good topic because given the current situation of pandemic, basically lots of company has this problem of their assets being valued down. So I think this is a very relevant topic for today. Okay, so let me share my lecture material. I have already shared this with Ms. Irfa. So just let me go through this. Share screen. Okay, is my screen, can everyone see my screen now?
Yes, yes, we can see your screen. Thank you.
All right, so I'm not sure whether you have already covered this topic impairment in class. Maybe someone can answer me. No?
Sorry. We will share this maybe during this time. Maybe the admin can share it in the chat room from IPAC, please.
Yeah, I just want to know whether you have already covered the topic impairment, because I saw the topic is one of the topic covered in your financial accounting subjects, right?
Yes, yes.
I just want to get some background because whether I want to go fast or slow, it depends on the current knowledge that is already with the students now. And I would like my lecture to be sort of an interactive one rather than me just giving. So if someone can answer whatever or ask question, that would be good. So perhaps if you have question, do not wait until the end. You can always interject in between. Okay, yeah, I think that is better than waiting until the end. Okay, all right. So impairment. Let's go through this. Before I go to impairment, of course, when we are talking about financial accounting, financial reporting, we are very much subjected to accounting standards. And each country, they have their own accounting standards. The only thing is now, most of the country in the world has already adopted international financial reporting standard, or before this, we know it as an international accounting standard. So IFRS is a new standard introduced in 2005, and majority of the countries in the world has already adopted IFRS, including Malaysia. Of course, United States is still using US GAAP. And I got to know that Indonesia is yet to fully converge to IFRS. You are still using what do I say? PASAK, PSAK. You are still using your own standards, but starting from 2014, the convergent process has already started, but still you are not fully converged to IFRS. In Malaysia, we have already started the convergence period in 2006 and 2012. We are fully adopting IFRS, but of course, similar to Indonesia, in Malaysia, the authority, the agency that is given authority to issue and apply accounting standard is Malaysian Accounting Standard Board. So we cannot carry the term IFRS or IAS, whatever standard it is. So we have to change the name to MFRS, that is Malaysian Financial Reporting Standard. But in Malaysia, we are adopting it word to word. So it is not to say similar, it is IFRS. The only thing that the change in name as well as the number of the standard. Okay, so I think it will be interesting to look into Indonesia as to how you're going to adopt, or whether you are still to use PSAK or going to go and adopt IFRS later on. So I think it's a good area to research into, and to see whether IFRS would be better than your current standard, or what would be the challenge of adopting IFRS, etc. So I think this is a rich area to research into for those who are interested into continuing their study to postgraduate level. Okay. So I have looked into this one for IAS or IFRS because there is no significant changes between the IAS 36 and under IFRS. We are just bringing in the IAS 36 and still adopt the same standard. That's not much changes compared to, for example, standards on revenue. Before IFRS, we have IAS 118 and 111 for revenue, but after IFRS, there are some improvement, and now we are adopting IFRS 15 for revenue. But for impairment, there's not much changes. So we are still using IAS 36. And for PSAK, there is a standard PSAK 48 for impairment of asset, and there's not much significant differences here between PSAK 48 and IAS 36. So basically, I can simply refer to IAS 36 and deliver my content today based on IAS 36 on impairment of asset. Okay. If anyone need to ask any question, please do so. Because I really don't prefer to talk on my own. Wait a minute, I need to rearrange my icon here because I cannot see what's written here. Because how do I put this up there? Anyone know? Show grid video. This is okay. This is one of the challenges of online, right? Because
that's right.
Yeah, in UKM, we are using the Microsoft platform, so the format is a little bit different. And sometimes you have to use WebEx. The layout is again different. So Zoom has a different layout. So you really have to learn everything. Okay, all right. So the core principle regarding impairment of assets, I've taken this directly from the standard itself. So core principle number one is that the asset that is owned by the company must not be carried in the financial statement at more than the highest amount to be recovered through its use or sale. So I will sort of discuss this in more detail with example later on in the talk. Okay, so if the carrying amount, because we say up here that we are comparing the two amount must not be carried here and the recovered amount. So if the carrying amount exceeds the recoverable amount, the asset is described as impact. So we are going to compare the two values. If the recoverable amount is less than the carrying amount, then we say that the asset is impact. Okay, so once that happened, the entity must reduce the carrying amount, because we have to sort of the amount that we carry in our financial statement should indicate or should portray the value that is currently in the market. So we have to bring down or reduce the carrying amount and recognize the impairment loss. Okay, and IAS 36 also applies to the group of assets, what we call as cash generating unit. So it's not only for individual asset, but if we have a group of asset that cannot function independently from each other in generating revenue, then that is what we call as cash generating unit. So I will give a brief description of what it means by cash generating unit later on. Okay. All right. So I think I saw the topic PPE, property, plant and equipment. And of course, when we talk about PPE, we cannot run away from talking about depreciation. And I am confident that the students has already mastered about depreciation. Amortization, I saw in the course outline, it is after impairment. So probably you have not yet covered the topic of amortization. Depletion, I do not see it in the course outline. Same also in UKM, we do not really touch on depletion because we do not really go into natural resources accounting. This will be covered later on in year 4, in the final year. Okay, so it is important to know the difference here. And to me, it's also interesting because we are going to compare it with impairment. There's a similarity as well as differences, and we need to know what is the similarity here and the differences. So if someone can answer me, what is depreciation? This is already covered in your course, so definitely you know about this. Maybe one of the participants can volunteer and answer me on this one, what depreciation is. Don't be shy.
Students, someone, what's depreciation? Dr. Zaini is asking. Maybe I can see who's joining here.
Yeah, maybe Dr. Abby can just call a name.
I think it's the reduction in the value of an asset.
Okay, reduction of value of an asset. Yeah, that's generally true. If we talk to someone outside the accounting field, then we will receive that answer, right? But as a student of accounting, we have to be more specific.
I think it is the reduction of a tangible asset.
Okay, tangible asset, but you are still using the word reduction in value, right?
Oh, I think the cost of using the tangible asset.
Okay, so something like that. So basically depreciation is the spread out of the cost, because when we purchase a fixed asset, tangible asset in this case, we will incur a cost that it may be substantial amount of cost, right? But we know the asset that we purchase now can be used over so many years in the future. So it is sort of illogical to charge all the costs in the year of acquisition. So what we do here, because we can use the asset over a number of years, we spread out the cost. So that's why we have the cost, we must have the cost, we must have the number of years that the asset is expected to be used. And of course, we have to have the method of how we are going to spread out the cost. So if you have the cost, you have the useful life of that particular asset, and you decide on the method. For example, you can choose straight line, you can choose declining method, double declining method, or if you are producing, you purchase a machine and that this machine is producing something, then you can also use the units, number of units that is being produced to spread out the cost. So depreciation is actually the spreading out of the cost. And true, as one of the student answered, it is we use depreciation, the term depreciation, for tangible asset. So on this matter, amortization is quite similar. The only thing is that we use the term amortization for intangible assets. Some intangible assets, they have a specific period of time when we can use that particular asset. Some, most of the intangible, they have indefinite life. Yeah. Same also for the tangible asset here. Some of the tangible asset has an indefinite life. For example, land. Okay. So when an asset has an indefinite life, definitely we cannot calculate depreciation or amortization for it, because we need that useful life in the formula to calculate the depreciation or amortization. So depletion is much more specific to natural resources. For example, in Malaysia, in Indonesia, we have oil reserve. So once you extract the oil, it will deplete. It will not stay the same forever. So you have to have a method to reduce the amount of that particular well, for example. So for this particular asset, we use the word depletion. But basically, in general, if we look at it, it's all the same. It will result in a reduction of the carrying amount of that particular asset. The only thing is that we don't use a reduction of value, because that is a layman term, that the layman person. So we have to be, we have to show that we are a graduate of accounting, right? So we have to be a little bit different from other people. Okay, so now we move back to impairment. So impairment is a drastic reduction, also a reduction in value, as what we have seen earlier. When the recoverable amount is less than the carrying value, then there is an impairment, meaning impairment is a reduction in value as well. Okay, the only difference, so we can see the similarity here. The difference is that all these three, depreciation, amortization, and depletion, is an accounting techniques then that enable company to gradually expense the resources or the assets that they have. Okay, so we can see that it is predetermined and done systematically. For example, if you acquire a machine, you purchase the machine for, let's say, 100,000. That's your cost, and then you will estimate how long this machine will be used. That will be your useful life. And let's say you're going to use straight line method. So let's assume that the useful life is 10 years. Then 100,000 divided by 10 years, we get, because it is a straight line, we get 10,000 a year. So this is done predetermined, meaning once you get the asset, you have already decided what would be your depreciation yearly until the end of the useful life. So it is a very systematic technique. But for impairment here, it is actually something unexpected. Okay, so it is unusual, unexpected, but we notice that there is a drop in value. So when that happens, then we know that the asset is already impaired. Okay, and this happened a lot during this pandemic, because, for example, we may have account receivable as one listed as one of our asset, and most of our customer, the account receivable is from, let's say, the customer that deal with travel agency, for example. So due to pandemic, all borders are closed, so no more traveling. So definitely your customer that create your account receivable cannot pay you. So the value of your account receivable now drastically reduced. So we have to acknowledge that, and we have to, if it is reduced and we know that your asset is already impaired, then we have to recognize it. Okay. Okay, so what is subjected to impairment? Of course, we have seen in this one here, all assets, right? So all assets, whatever asset we have, whether it is a tangible asset, intangible asset, or we have natural resources, all assets that we have, whether it is current asset, like my example earlier, account receivable, inventories may also subjected to impairment, not just tangible asset that is fixed in nature. Okay, so tangible, intangible, both are subjected to impairment. And of course, tangible and tangible asset also, we have two types here: definite useful life or indefinite useful life. For example, the indefinite one is land, for example, okay, because the land will be there forever. Okay, intangible asset, indefinite useful life. For example, we may have copyright. I think copyright is still, copyright is indefinite, trademark is definite. So whether it's definite or indefinite doesn't matter, as long as it is an asset. Okay, they are subjected to impairment. But the difference is that for tangible asset, intangible asset, that is definite in life, the useful life is definite. You can determine how many years you can use that asset. This asset will be depreciated. For intangible, we term it as amortized. But for indefinite useful life, there will be no depreciation for it, because we cannot calculate depreciation, because we don't have the basis to distribute it throughout how many years. Okay, so what is subjected to impairment? Simply all assets. Okay, whether it's definite or indefinite life. Okay, so let's go into more detail on the asset impairment here. So this definition we've seen in earlier slide, it is actually a reduction in the value of a company asset. Either it's tangible or intangible. So reduction here is to reflect a decline in the quality, quantity, or market value of that particular asset. So whether the value is, you determine the value internally, okay, the quality, the quantity, or you mark the value to market value. Okay, but the bottom line is that there is a reduction in the value of the asset. So once we notice that there is a reduction, we should not carry the asset in our financial statement at more than the highest amount that could potentially be recovered from selling it, or basically whether you're going to sell it or use it. Okay, so we are going to look into more detail on the impairment itself. Okay, so this is basically how we determine whether there is impairment loss or not. Okay, so impairment is recognized when carrying amount of the asset is higher than recoverable amount. So we must define all the terms here, and this definition is the definition that I get from the standard itself. Okay, so the carrying amount is the amount after deducting any accumulated depreciation or amortization and accumulated impairment loss thereon. Okay. Can someone tell me what do we call the value that we get after deducting the cost, deducting the accumulated depreciation here? What do we call the value? If we have a particular asset, we know the cost, and then we have already used the asset for several years, so we know there is accumulated depreciation. When we deduct cost and accumulated depreciation, what do we call the value that we get from that?
Is it called as book value?
Yes, book value, right? So carrying amount is not the same as book value. If there is no impairment, then normally we just, the carrying amount will be the same as book value. But because impairment nowadays is quite common, so that's why we start using the word carrying or the term carrying amount rather than the book value, because the book value will end up to here minus the accumulated depreciation. But if there is impairment loss, then you have to also deduct the impairment losses here. So the term that we use for the value is carrying amount. Okay, recoverable amount. Recoverable amount is the higher the value, the higher between fair value less cost of disposal and value in use. So for recoverable amount here, we have two value to compare. That is fair value less cost of disposal and value in use. What it is saying here is actually, and of course we take the higher here. So fair value less cost of disposal here is when we assume that we are going to sell the asset. So that particular asset, if we were to sell it, what would be the value? So the fair value less cost of disposal. But on the other hand, we can also assume that we are going to use that particular asset and not sell it. So that would be the value in use. So how we get these two value is depending on what our assumption is. Okay. Can anyone tell me the fair value, the concept of fair value here? We may recognize or we may carry the amount of asset in our financial statement at cost, right? So that is a historical cost method. But for certain asset, especially financial asset, the value would change quite frequently, and the cost that we pay for that particular asset may not reflect what is the value now. So that's why under IFRS, we are actually moving towards the use of fair value, because we want the information to be more relevant to indicate more what is happening in the market currently. So fair value is the value or the price that we will receive if we were to sell the asset. Okay? But we are not selling it. So we are marking it to the market value, but we are not selling it. That's why we do not call it as a market value. We call it fair value. Okay. But of course, you have to take also into account the cost of disposing that particular asset if you were to dispose it. So this is an incremental cost, the cost directly related to the selling of that particular asset. So that is what is considered as fair value less cost of disposal. And then we have to compare this with value in use. Okay, so value in use is the present value of future cash flow that we may get from using that particular asset. So there are two sides of it. Fair value here, we are considering that we are selling, we are assuming that we are selling that particular asset. but value in use here, we are assuming that we keep using that particular asset. Okay, so we have two values to consider, and we will take the higher between the two. So the higher value will be our recoverable amount. And then we will compare between these two values. So our cash generating unit here, there is a further explanation later on. Okay, but it is actually the smallest identifiable group of assets. It is a group of assets, and this group of assets, if you were to consider it separately, it will not be able to generate cash flow. So we have to consider it as one group. So this is called cash generating unit. Okay, so this is the diagram, if we were to show it diagrammatically. So we have to compare between the carrying amount and the recoverable amount. And this recoverable amount is the higher of these two: fair value less cost to sell, as well as value in use. So the higher value will be recoverable amount. Then only we compare these two amounts to determine whether there is any impairment or not. Okay. Okay, so when do we have to test for the impairment? Basically, we have to do it on annual basis. The difference is that if the asset has a definite life, meaning the asset is a depreciable asset, we do it on annual basis, but only when there is indicators of impairments. If there is no indicator of impairment, we need not test for impairment. But for the indefinite life, because there is no depreciation, we must do it on annual basis. Okay, so how do we know whether there is any indicator of impairments or not? These are the guideline that we can use. For example, the information that we get may come from external sources, may be from internal sources, and this is very specific for the investment that we make to our subsidiary, joint venture, as well as associate. Okay, so for external sources of information, for example, currently we are in pandemic, so this is an external environmental factor, right? Everyone will be affected by it. So you just have to, but not all companies or not all assets will be subjected to will be affected by these external forces. So we have to really evaluate the situation. Okay, or if there is significant changes, okay, with an adverse effect on the entity have taken place during the period, because we have to do it every year. For example, for B, if we have a piece of land, for example, and there is a new regulation by the government that limits the use of that land, and we may be affected by that new regulation. So probably the value will be reduced. So we have to test for the impairment. For C is very self-explaining here. If there is changes in market interest rate or other market rates of return on investment, because when interest rate changes, for example, it goes higher, it will affect our discount rate, because our future cash flow, we need to discount it to the current value, and we will be using these rates. So if there is changes in the rates, then the value will also change. So we need to do the test for impairment. D is the carrying amount of the net asset of the entity is more than its market capitalization. So when our net asset the amount is higher than our market capitalization, probably some of our assets has been overvalued. So we have to do the test for impairment. Okay. For internal sources of information, it's quite similar to external, except that the information is generated within the entity rather than because of external factor. Okay. For example, E, evidence is available of obsolescence or physical damage of an asset. Definitely, when there's physical damage, then the value of the asset will not be the same as what we expect it to be. So we have to test it for impairment. Okay. F is self-explaining here. Significant changes with an adverse effect on the entity have taken place during the period or are expected to take place in the near future. For example, the asset becoming idle. Okay, asset becoming idle because maybe the model is no longer demanded by the consumer, so you will not be using that particular machine, for example. So in this case, you have to test for impairment. Evidence is available from internal reporting that indicates that economic performance of an asset is or will be worse than expected. So this is very much internal, where you see that that particular asset cannot perform as what is expected from them. Okay, so this one is very specific to the investment that we make to our subsidiary or associate. So this is very much related to the dividend, the amount that we will receive from that particular subsidiary in the future, whether it will be reduced, the amount will be reduced due to something happen to that particular subsidiary. Okay. I'm sorry, I have to keep moving this. All right. So let's go to the example. So theoretically, there's not much to impairment. So we will illustrate more through example here. Example one is very simple one. Let's say this company perform an impairment test and determine that the carrying amount is 300,000, fair value less cost to sell is $280,000, and value in use is 305,000. So carrying amount here is 300. For recoverable amount, we have to compare between the two. The value is given 280,000 for fair value less cost to sell. Value in use is 305,000. So the recoverable amount, we choose the higher between the two. So our recoverable amount will be $305,000. So because the recoverable amount here is higher than the carrying amount, then there will be no impairment. Okay, so that there will be no impairment here. Okay, right. Let's look at example number 2. Let's assume the same company. Now the carrying amount is still 300,000. The fair value to sell, the fair value less cost to sell is still the same, 280,000. But the value in use, let's assume now the value is 275,000. So in this case, we have to take 280,000, which is the higher between the two, as our recoverable amount. So now we can compare it with the carrying amount, and we see that the carrying amount here, the value is higher than the recoverable amount, or recoverable amount is less than carrying amount. Therefore, we have to recognize the impairment. So when we recognize the impairment, meaning we have to start recording it. So we have to make a journal entry of this impairment loss. So the journal entry, so this is a summary of earlier slide. So the journal entry would be this. Okay, we debit loss on impairment. It is a loss, that's why we debit, and we will increase our accumulated depreciation. So we credit to the account. Okay, so simple. The journal entry is very simple. The more critical step is to identify whether there is an impairment loss or not. But journal entry is very simple. Okay. Any question up to here? Any question? No? Okay, so I assume that everyone can follow me, because sometimes I have this tendency of talking too fast. because there's too much to in my head that I need to put across. So, okay, if everyone can follow me, that's good. Okay, so let's look at more example here for a depreciable asset. So I guess by now we have already know that when an asset has a definite life, then that asset is depreciable. We have to spread out the cost, right? So let's look at this particular example. I'll go a bit slower so that please think together with me so that we can really understand the example here. Okay, so let's say on December 31st, 2021, this particular company has in its account an equipment with a cost of 26 million and accumulated depreciation to this date is 12 million. The total useful life is expected to be 4 years. Residual value is 2 million. And this is further information related to the equipment. As of 31st December 2021, the carrying amount is 14 million. Of course, we can calculate this, right? We know where this comes from. The 14 million comes from, right? It is 26 minus 12. Am I right? Yes, okay. And we are using straight line method for the depreciation. For 2021, depreciation is already recorded, okay? Georgia Limited has determined, okay, now it determined that recoverable amount for this particular asset is only 11 million. Remaining useful life is 2 years. Total useful life is 4 years, but we see that there is already accumulated depreciation here, meaning the asset has already been used, right? So the remaining useful life is 2 years. Okay. By quick look of it, is there any impairment here? Is the asset impaired? Okay, let's look at this. Okay. Carrying amount is 14 million, right? Recoverable amount is 11 million. Okay. In this case, the recoverable amount is already given. So basically, the information here is not made known to us, but we know the 11 million is the higher value between these two. Okay. So because the recoverable amount here is lower than the carrying amount, there would be impairment. So we have to recognize the impairment. So once we recognize the impairment, definitely we have to make a journal entry. So the journal will look like this, right? Loss on impairment, 3 million, just the difference between the two. And we increase our accumulated depreciation by the same amount. Okay, simple, right? Okay. So just to explain further. Okay, so now our equipment, the cost is 26 million, but now the accumulated depreciation is no longer 12 million because we have this 3 million impairment loss. So it becomes 15 million. So the carrying value now is 11 million. Okay. Right. So let's say for the coming year, because of this, we now carry this amount because of the impairment loss. We only carry this amount instead of 14 million, right? So let's say for next year, it determines that useful life does not change, meaning there are still 2 years that the company can use the asset. But instead of what was it, the residual value in the original example is, okay, here, right, 2 million, right? but because of the impairment that happened at the end of 2021, the company determines that there will be no residual value. Okay, so it is now 0. But the remaining life does not change. It's still 2 years, and the company still use straight line depreciation. So for 2022, because we have a new value here, whenever there is impairment, we need to recalculate our depreciation. Therefore, in this example, for 2022, our depreciation expense is no longer 5,000 a year, but now it becomes 5,500. So this we get from the new value here divided by the remaining life of 2 years. Okay, so our depreciation now becomes 5,500 per year for the remaining 2 years. Okay, in short, whenever there's an impairment loss that we have to recognize, definitely our carrying value will be different from if there is no impairment loss. So whenever this happens, we need to recalculate the depreciation thereon. Okay, so in the future years, our depreciation would be different compared to if there is no impairment loss. And sometimes the company will re-evaluate the assets as well in terms of remaining useful life, in terms of residual value, and maybe it's a good time to change the depreciation method, for example, because now they have a reason as to why to change the method. Okay. Okay. So let's go to example number 2 here. Because if you see that in this case, for example, all the value are already given. This one here is just to demonstrate how we can get the value in use. Okay, the fair value is determined by the market, so you have to look into the market, what is the current market price, and take that as your fair value. But for the value in use, we have to calculate it internally. Okay, so this is an example of how value in use here is determined. Okay, so let's look at this one example here. This company KL Limited has a machine and it tests for impairment. Carrying amount is 200,000. This is what is already recorded in the book. Estimated remaining, not the total useful life, but the remaining useful life is 5 years. There's no market related information, therefore we cannot estimate the fair value of the machine. So now we have to estimate the value in use because we don't have the fair value information. Okay, so let's say this information is given. Okay, because there is no information on fair value, therefore we have to use the value in use to indicate the recoverable amount. Okay, so the discount rate used is 8%, and the future cash flow that can be generated from using the machine need to be estimated. So it is estimated to be 40,000 a year for the next 5 years. And at the end of 5 years, we can, for example, sell the machine and get 10,000 at the end of the year. So this will be the total cash flow that we can get by using that particular asset for 5 years. Because the 40,000 is going to be received over 5 years, and the 10,000 will only be received at the end of 5 years, we cannot simply take 40,000 multiplied by 5 plus 10,000 because there will be a time value of money. So we have to discount the amount to present value. So the discount rate that we are going to use is 8%. So this is what we are doing here. This 40,000 that we received in equal amount for 5 years is what we call as annuity. Okay, so this 40,000 is an annuity that we will receive over 5 years. So we have to discount this amount using 8%. So we can actually calculate, if you are taking finance, that there is a formula to calculate the present value. But why bother? Because we already have the present value table. So from the present value table, we get the discount factor. So this is the discount factor that we get from the present value table. So this is present value table of annuity, because we will receive 40,000 equally for 5 years. So how we find it is this way, 8%. Hope you can see my cursor here. Shall I put it bigger? Okay. So this 8% here, okay. And we look for 5 years. So 5 years is here, okay, 8%. So this is 3.99271. So that's how we get the value of the discount factor that we use. Oops. Wait a second. I should not close that. I lost my. Okay, it's okay. Okay, so that's how we get this 39971 here. Same also for the 10,000. The only thing is that 10,000 we will only receive once. That is at the end of year 5. So in this case, we cannot use the annuity table. We have to use the present value of a single sum. So it's quite different from annuity. So if we go to this one here, same again, same again, 8% here over 5 years. So that's how we get 0.681. Okay. So that's how we get to the discount factor. So simply multiply, then we get this amount here, 159,708 and 6,805 here. Total up the two, because this would be the cash that will be generated by the machine from the use of it. Okay, so 166,514 is now the value, the amount of value in use. So we can compare this then with the carrying amount. So we have carrying amount of 200,000, recoverable amount, the value in use that we have already calculated is 166,514. So since this amount here is lower than the carrying amount, then we know that we have to recognize for impairment loss this amount, 33,486. When we recognize the impairment loss, we must journal it, right? So our journal entry is very simple. Just debit the impairment loss and credit the accumulated depreciation. So this particular example is on how we can calculate the value in use. Okay, so there's a lot of estimates involved here. You have to estimate how much you will get from the use of the machine. You have to estimate what is the discount rate that you're going to use. So the value here will very much depends on your how accurate your estimation is. Okay. Okay. Any question up to that before we move on to case number 3? Okay, so I can proceed, right? Right, so earlier we have an example of an asset that is a depreciable asset, the asset with definite life. So it is depreciable asset. So let's now look at the asset with indefinite life. Okay, so let's say this company have several parcel of land, and this company use historical cost in accounting for the land. In year 2021, the land with a cost of 200 million is valued at 180 million. So this is the recoverable amount. This is the carrying amount. So the carrying amount is 200 million. Recoverable amount is 180. Okay. The value is already given to us. So we know there is a 20 million impairment loss here. Okay, so when there is impairment loss, we have to recognize it. We have to journalize it. Okay, so see the difference between the indefinite life and the definite life journal entry? Can you see the difference?
Yes, madam.
What is the difference?
There is no cumulative depreciation there.
Yeah, we directly credited that particular asset because this asset is not depreciated, right? So the debit entry is the same, loss on impairment, but the credit entry we credit directly to the asset account. Okay, so that's how we account for the impairment loss for indefinite life asset. Okay, let's look at another example. For this example, the company is using historical cost in accounting for the land. Let's look at another example. Okay, where now the company is using a revaluation method, because in accounting for your PPE, especially for the indefinite life, you have a choice between account for this kind of asset using historical cost or revaluation method. So let's see if the company is using revaluation method and there is impairment, how do we record for it? Okay. So let's say the cost of the land, the carrying amount is 300,000. At the end of the year, the value of the land is revalued because they are using revaluation method here. So the value is now 400,000. And because they are using revaluation method, they will be carrying this amount in their account. Okay, so they will have to recognize this as an unrealized gain on revaluation. So now the land from 300,000 will increase by 100,000 and it will be carried as 400,000 in the book. Okay, because there is because this company is using revaluation method. Okay? If the company is using cost method, then it will still carry at 300,000. This will not be recognized. Okay, so this is recognized because the company is using revaluation method. Okay, so let's say in 2021, there is new regulation that limits the use of the land. So because of this regulation, it brings down the value to 250,000. So now from 400,000, it goes down to 250,000. So we know that there is impairment here, right? There is impairment because the value now is less, 150,000 less than what is being carried in the book. So there is impairment. But, okay, because this company is using revaluation method, and before the impairment happened here, the value of the land is increased because of the revaluation. When this happened, we know that there is impairment, but the amount of impairment that we are going to recognize is not 150,000 because of this. Okay, so if this happened, we need to get rid of the unrealized gain on revaluation first before we recognize the impairment loss. So it will be like that. Okay, so we get rid of this first, the unrealized gain that we recognized before. But we know that the value of the land reduced by 150,000. So the remaining 50,000, this amount only will be recognized as impairment loss. So it's a bit different. Okay, so if we use a cost method, it is simpler. But once we use revaluation method, then we need to look at what happened before before we make journal entry to impairment loss. Okay, any question up to that? Okay, so now we will see the okay, let's just look at the ledger, how it will look like. So this is the journal entry that we made before. Let's say the land, when we purchase, we record at 300,000. At the end of the year, there is a revaluation, so it increased. The land value increased by 100,000. But at the end of year 2021, there is an impairment here. So we get rid of the unrealized gain first before we recognize the impairment loss. So in our land account, in the end, we will see the current value here, 250,000, just to clear our head on what happened. Okay, so now let's look at the reversal of impairment loss. Because the value due to impairment, this year, maybe we see that the value goes down, but next year, we don't know what will happen. So probably next year, the value will go up again. For example, okay, now we are towards the end of the pandemic. So most of the company has recorded impairment. But once we are out from the pandemic, the same asset may increase in value again. So how do we do about this one when this happens? Okay. So let's look at this one example here. So this company purchased an equipment on January 1st, 2021 for 300,000 here. Useful life is expected to be 3 years, no residual value. So if the company is using straight line method, the depreciation will be 100,000 a year, right? 300,000 divided by 3, so you get 100,000 a year. So the carrying amount at the end of the year will reduce by 100,000. So we will get something like this, okay? So let's say this is on 1st of January. At 31st December, there is impairment loss being determined, 20,000. So when we recognize that there is an impairment loss, we have to make a journal entry. So as before, loss on impairment debit, credit accumulated depreciation for 20,000. Let's say, okay, so after the impairment, we have to recalculate our depreciation, right? So before, the depreciation is 100,000 a year because the value of the cost of the asset is 300 divided by 3, right? But after the impairment, the value of the carrying amount reduced by 20,000. So the value now is only 180,000. So we divide by the remaining years, 2 years. Okay, so we get 90,000. Okay, so we have 90,000 at the end of 2022, and because there's no residual value at the end of useful life, the amount will be 0. Now, let's assume, okay, at the end of 2022, the company determines that the recoverable amount here is now 96,000. Okay, so if we look at here, by right, if we charge the depreciation of 90,000 for year 2022, the carrying amount will be 90,000. But at the end of 2022, this company determined that the recoverable amount is actually 96,000, which is more than the carrying amount, 90,000 here. Okay, so because this asset has been impaired before, this is what we call as a reversal to the impairment. So we can reverse it. Okay, but if this happened only this year, then we cannot recognize it as an increase in value. Cannot. Okay, because for this kind of asset, we are not using revaluation method, so we cannot. But because this asset has been impaired before, we can reverse it. Okay, so this is how we reverse it. Okay. So we have to bring the 90,000, the value of 90,000 here, we have to bring it to 96,000. So what we do is that we reduce our accumulated depreciation account by 6,000, and we credit the recovery of impairment loss. So this will be reported in the income statement. Okay, so if we look at the journal entry, it will look something like this. Only for the depreciation here, for the first year, accumulated depreciation is 100,000. At the end of the year, we recognize the impairment loss as well. So now the total accumulated depreciation is 120,000. For year 2022, we have to readjust our depreciation. We have to recalculate. So that's why we recognize 90,000 here. But at the end of the year, there is a reversal of the impairment. So we have to reduce our accumulated depreciation by 6,000 and recognize this as a reversal. So if we show the accumulated depreciation account, we will see something like this. This is for year 1 depreciation. Recognize the impairment loss here. Okay, so at the end of the year 1, we will carry the amount of 120,000 forward. So that's why we have here. This is the depreciation for the second year, but there is an reversal of the impairment loss here. So this is the amount of accumulated depreciation that we will use to deduct from the cost of the asset. And the cost of the asset is 300,000. So 300,000 minus 204, we get 96,000. Okay, so this is the reversal of the impairment loss. Okay, but there is some conditions or some rules on reversal of the impairment. Okay, so this is what I get directly from the standard. Okay, the increase in the carrying amount due to reversal. Okay, just like the example that we did before, should not be more than what the depreciated historical cost would be. So like our example before, meaning this one here, when we reverse the impairment, the value of the reversal should not be more than the value of if there is no impairment. So in this particular example, if there is no impairment, the value of the asset at the end of 2022 should be 100,000. Okay, but after the impairment, the value is only 90,000. And after the reversal, the value must not be more than 100,000. Okay, so in our example, because the value after the reversal is 96,000, so we can reverse all the 6,000 and give it back to the assets value. Okay? But if it results in more than 100,000, for example, then we can only reverse up to the amount that will bring the asset to the value of 100,000. It cannot be more. In our example, the amount is 6,000. The amount that we reverse is 6,000. So that will bring the value of the asset to 96,000. If there is no impairment, the value of the asset is 100,000. So we can reverse all 6,000. But let's say, for example, the reversal is 12,000. Okay, so if the amount is that we are going to reverse is 12,000, this will bring the value to 90 plus 12 is 102, right? So 102 is actually more than 100,000 if there is no impairment. Therefore, we cannot carry 12,000 as reversal. We are only allowed to carry 10,000. So the 12,000 will be just gone. Okay, so we bring the value of the asset to before the impairment. That is the amount that is allowed to be reversed. Okay. Okay, so this is an example. I've already mentioned this. Okay, for example, 100,000. So in this case, the 6,000 can be reversed. And then reversal of an impairment loss, we will recognize it in profit and loss account. The amount that we reverse will be reported in the profit or loss account or income statement, okay, unless it relates to the revalued asset. Because revalued asset, we will directly increase the value of the asset again. Okay. All right, and of course, just like impairment, if there is a reversal of the value, we also need to adjust the depreciation for future period. Same as when we calculate or we recalculate for impairment. Okay, and then reversal of an impairment loss for goodwill is not allowed. Okay, that cannot be done. So if the goodwill is impaired, you recognize the impairment, that's it. There will be no reversal of it. Okay. Any question up to there? Okay, so we are already towards the end. Cash generating unit, I've mentioned before, this is a group of assets that cannot function individually, so we have to value it in a group. When this happens, we call this as a cash generating units. Okay. Example of it, individual hotel in a chain, in a hotel chain. Okay. Branches of large clothing retailer. For example, we have a clothing retailer, branches of it all over Malaysia or Indonesia. For example, the branch can function on its own, okay, irrespective of another branch. But within that branch, then everything, all the assets, they will function as one. Okay, so between one branch to another branch, these are separate cash generating units. Okay, so all the assets of this particular branch is grouped together as one cash generating unit, but it is separate from the other branch, because that branch can generate their own cash flow from there. Okay, but whatever belongs in that particular branch need to be, for example, work together, meaning you cannot just have the shop without the clothing. You cannot. You have to have all these units together to function as to function and generate cash flow from there. So we call that as a cash generating unit. So for impairment, we normally test it for this particular group of assets as one cash generating unit, rather than test it for the building, test it for the equipment and everything. We test it for one unit, as a one unit. Okay, so this is cash generating unit. Okay, and of course, to identify the assets, you have to apply judgment here. It's not a straightforward, direct kind of thing. Okay. All right. So before this, all the examples are related to the assets that we are going to use in the business. But there are also some assets that will be disposed in near future. So if there is impairment on this asset, what do we do? Okay. So in this particular case, we will report the impaired asset using the lower of cost or net realizable value. So actually this can be seen clearly when we do inventories. Okay, inventories, we will value we will show the carrying amount always at lower of cost or net realizable value. So this apply also to other assets. That is inventory is definitely, because inventory, you're not going to keep the inventory, you are going to sell the inventory. That's why inventory always has to be recorded at lower of cost or net realizable value. Okay, but this concept also apply to the assets that we use in the business if the asset is to be disposed of in the near future. So if we identify the asset as no longer to be used in the business, we are going to dispose it in the near future, then we will have to apply this rule. Okay, we will report it at lower of cost or net realizable value. Net realizable value is actually fair value less cost to sell. Okay, so that's another term that we learned today. So for this asset, we will no longer depreciate or amortize it, because we know we are going to dispose it very soon. So we just compare the fair value less cost to sell, compare it with the cost. and we take the lower value, that there is no more depreciation or amortization to be charged. Okay. Okay, so it says here, we can write up or down. Okay, we can increase or decrease the value as long as the carrying amount after the write up never exceeds the carrying amount of the asset before the impairment. So it applies the same rule as the reversal of the impairment earlier. Okay. Any question up to here? We are already towards the end now. So this is the summary of the whole thing. Okay, so impairment test is when we compare between the recoverable amount and carrying amount, and if the recoverable amount is higher than the carrying amount, then there is no impairment. Okay, so this is the impairment test. But if the recoverable amount is less than the recoverable amount, the carrying amount, then there is impairment. There is impairment. Okay, so when there is impairment, you have to, so this is what we call a measurement, because you have to test, you have to know the value of it. So it is a measurement of the impairment. So there are two situations here. Okay, we have gone through. One is for the asset that we held for use, meaning we still have that asset to be used in the business. We will recognize impairment loss when the carrying amount is higher than the recoverable amount. And when we recognize this, for the coming depreciation, we have to adjust it, we have to recalculate it, because the basis is now the new value that we get after the impairment. In the future, if there is a reversal, then we can reverse the impairment, but there is a maximum value how much we can reverse. Okay, but another one is for asset that we held and we want to we intend to dispose the asset in the near future. So for this particular asset, we carry the value at lower of cost or fair value, less cost to sell. So for this asset, we will not charge any depreciation anymore, okay, because we're going to dispose it. So this asset may also be impaired. So here, okay, so we impact. So this is the whole picture of impairment issue. But I think in practice, if you open a newspaper, nowadays you may see a lot of companies doing this impairment, because the business environment has changed due to the pandemic, and the value of the asset, most of the company experience a reduction in value of their asset. So the impairment is quite common nowadays. Okay, we see it on daily basis. Okay, just before I conclude, can we go, maybe I give you about 3 minutes to think through this particular exercise. A very simple one. I think you can quickly jot down the answer before I go through it.
Okay, yes, students. So Dr. Zaini has given you an exercise. Maybe you want to write down on a piece of paper. There's, I think, from Rini. Who else is here?
Yes, ma'am.
Adelia, Fatima. You can write down the answers. You must Dr. Zaini. So I think the students that are joining this morning, some of them are from different,
okay.
year. Yeah, year students.
Okay.
But There's some from students that are now at year 3, and they have the impairment on, in our department, is for intermediate accounting 2. Is it same in Malaysia?
Yeah.
We have
We have
intermediate
impairment in
accounting.
intermediate 1.
Oh, I see. Okay. So do you have intermediate accounting 2 as well, up to 3?
No, only up to 2.
Ah, I see. I see. We have up to 3.
Oh, okay. So what we have here, we covered revenue and asset in intermediate 1, liability and expenses, as well as equity in intermediate 2. So we cover all elements in 1 year, 2 semesters.
We cover intermediate 1 on current assets, only current assets, and also some introduction, like the financial conceptual framework, and then current asset. And then intermediate 2, we start on the non-current asset for the PPE and also the liabilities and equities. And then intermediate accounting 3, we have the investment, the revenue, and I think you used also Kiso Wagon.
Yeah, we use the same book.
Yes.
But of course, our main reference is the standard.
Yeah, yes.
So anything we
the
always
MFRS, the Malaysian
the
Financial Reporting Standards.
Yeah.
So yes.
That is actually our kitab lah.
That's right. Yes, we have the PSAK. We are adopting the IFRS, even though it is partially, but I think all of them are now. I think the board, the SAK we call the board, who's who's doing the PSAK. I think they said they are going to fully adopt the IFRS. Yes, they fully adopt. But I know Malaysia already done convergence since 2006.
2012. 2006, we are on the converging.
Okay,
so
and
we slowly adopting the IFRS, but fully converged in 2012. So
I see. Yes,
it's been 8 years.
Yes,
but I think it will be interesting to look at the Indonesia, how the process of adopting IFRS, if you were to adopt. So it is an interesting research area.
Yes, it is. Yes, we are on our journey to fully adopt, and there's some issues in the PSAK and the implementation. I think yes, it's very interesting doing a research on that. Maybe we can do some joint research.
Sure. I will ask for your email address later on.
Yes, from Miss Fitri, I think.
Okay. All right, students. I think this is just a simple one, right? We can quickly look into this one before we end the session, and probably if there is any questions, then I can take the questions before we end the session. Okay.
Yes.
So for this example, you have to prepare the journal entry. Maybe I will not be calling out the names, but I think the students can compare the answer with what you have jot down on your paper. Okay, so this is the information. The cost 7 million, accumulated depreciation 1.5 million. So from here we know the book value is 5.5 million. But it's given that value in use is 5 million, fair value less cost of disposal 4.4 million. So from this information, we know that the recoverable amount is 5 million. So we will compare the recoverable amount with the carrying amount of 5.5 million. So from here, we know the impairment loss is 500,000. So we will prepare the journal entry for Okay, so this 500,000 is the impairment loss. So the journal entry is very simple. So you just record debit loss on impairment and credit the accumulated depreciation. So for year 2022, we have to recalculate the depreciation. So whenever there's impairment, you need to recalculate the depreciation. Okay, so now the depreciation, we use the new value here, 5 million after the impairment, divided with the remaining useful life 4 years, so we get 1250 for the depreciation after the impairment, the year after impairment. Okay, so that very simple actually, but we have to understand the whole concept, the whole idea of a impairment. Technical wise, in terms of accounting for it, it's not that difficult. Okay, so I hope I've done. So I've given some new information, or maybe refresh your knowledge on impairment a bit after the session. So actually, it's been a great opportunity for me because normally I just see my students, so now I see a different student. So it is actually adding on to my knowledge as well. So thank you very much for UMI for giving me this opportunity to share a little bit of what I know and what I normally share with my students here. Okay, so I pass it back to Dr. Evie. Thank you. If there is any question, for example, I will take it.
Thank you very much, Dr. Zaini. It is our much appreciation. We're really are very grateful to have you, and the students are certainly very grateful to have a lecturer from UKM, from Malaysia, and it's a great experience for the students also to be able to listen to your very comprehensive explanation, the concept, the important concept of impairment. I think it is very important nowadays during the pandemic, where companies experience the declining value of their asset. And I think in practice, impairment are very important, and it's very urgent to understand. So I hope all students from UMY, you have questions. Apakah ada pertanyaan? May I speak in bahasa to them, Dr. Zaini?
Yeah, sure.
Oke, jadi silahkan kalau mau bertanya ya. Jadi impairment ini memang hasil dari penurunan nilai aset ya. Jadi perusahaan itu memang tidak boleh overstated ya, tidak boleh mereka mencatat aset lebih dari recoverable amount-nya ya, recoverable amount yang memang mungkin disebabkan oleh adanya kondisi seperti pandemi sekarang gitu ya. Aset-aset itu kan turun nilainya karena kondisi pandemi, sehingga sangat penting bagi metode konsep akuntansi ini diaplikasikan karena perusahaan itu tidak boleh mencatat ya asetnya itu berlebihan ya, lebih dari nilai recoverable amount. Maka tadi terjadi loss of impairment ketika carrying value-nya itu lebih tinggi daripada recoverable amount. Oke ya. Do you have questions, students? Do you have any questions? Pertanyaan? Tidak ada. Oke. Once again, thank you very much, Dr. Zaini. It is a great honor to have you. I hope the pandemic will be over soon, so we can visit each other. So we have visiting professor from Malaysia previously. They come to Indonesia, and because we're doing this routine, so. It is our honor to make this event, collaborate event. Okay, maybe some students are shy. They usually I usually have tell them to write down the questions after also the class, or sometimes we discuss after. So thank you again, Dr. Zaini. Thank you so much. I will give back to the MC now, Tiara.
Okay. Thank you to Ms. Zaini for the attractive material. Hopefully we can have a better understanding on intermediate accounting impairment topic. And also thank you to Miss Effie as a moderator who guided discussion today more clearly. Now it is turning to the last agenda, which is closing. As a master of ceremony, I do apologize for any mistake during this event. Finally, I say thank you. But before leaving this event, kindly please everyone turning on your camera because we want to take a picture. Okay, first, ready, 1, 2, 3. Okay, once again, 1, 2, 3. Okay, thank you, Miss Effie and Miss Zaini, and everyone for joining this lecture, and see you on the next event. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, everyone. Thank you. Assalamualaikum.
Thank you, Dr. Zaini. Thank you very much, Dr. Zaini.
Okay. So, Dr. Evie, I will get your email address from Irfa, maybe?
Yes, I will have your emails. Thank you so much.
Thank you. Assalamualaikum.
Waalaikumsalam warahmatullahi
Waalaikumsalam warahmatullahi wabarakatuh.